What a start to the year 2024 has been, with the S&P 500 constantly making new record highs, the FTSE 100 hovering around all-time highs but really not giving UK investors much to work on, and the FTSE 250 is as lost as ever with incredibly high volatility. But how has all of this impacted my trading the 212 portfolio? In this video, I'm going to reveal all. So currently my portfolio balance is £1,352. However, as you can see, my total account value is £27,090 with around £25,700 reserved for orders. In this video, as always, month on month, I'm going to show you how my portfolio has changed, how I've made money in my own particular ways, how it's going for me, and the risks involved in doing that. If you would like to sign up to Trading 212 and receive a free share, then use my link in the description down below, or even I've got a promo code, you can message me and I'll give you that if you've signed up less than 10 days ago and didn't receive a free share. In total, I've received £1,767 worth of free shares, so that's 112 shares. I like to show you this every single month as I do want to be transparent with how much free shares I've got, so how much is my own money and how much isn't. Going forward, I am actually not going to get any more free shares from Trading 212 because of a different agreement I have with them. So I might not show this number anymore, but this number will remain unchanged. So yeah, get your free share using the link in the description. What I do want to show is that a lot of my gains is not just through deposits, but it has been through trading a certain ETF, which I'm going to show. So if I go into my total history and go under orders, you can see that to date, my realized profit and loss is now £1,779 in the positive. This is up from £1,274 last month, giving me a gain of over £500 of realized profits. Now, I will be the first to say that I don't recommend any sort of trading because in the long term, it is better always pretty much to keep invested for the long term. I have a significant amount of my portfolio in long-term investments. Therefore, this money is in my general investment account, as you will see. So I am willing to take that risk into trading on more short-term basis. However, even when I do that, I am actually trading assets such as ETFs that I am very willing to hold in the long term in case the price goes down. In terms of dividends, I've received since opening my account with Trading 212, in my general investment account anyway, £180. So now what I'm going to do is to show you all my holdings in my Trading 212 Invest account, and then we'll move on to my Trading 212 ISA and you can see my strategy with that. So as you can see, the Trading 212 return currently tells me that I have a return on investment of positive 13.5%, which sounds outrageous and it probably overall isn't that much. My return, Trading 212 calculated, is £160 in the green. As you can see, because I do trade a lot, you can see that, you know, there's huge amounts of drops when I actually do sell out of my positions. But generally, you can see even through the drops, you can see that my portfolio is actually growing month on month. This is due to two things. One is deposits. So actually in the past 2 months, I didn't deposit anything. Everything was actually just growth and free shares. But this month I've deposited around £1,000. So yeah, my portfolio will grow because of that. So first we have 0.12 shares in Walt Disney. Over the past month, Walt Disney has done incredibly good and it is now up 16.55%, which is very, very good. In my portfolio, it is up by 22.4%. So that is a gain of only £2.07. You can see that Disney has started to pay a dividend yield again at 0.67%. And here you can quickly look at their financials, although please do take into consideration that this isn't the complete financials. If you do want to look more deeply into the financials, maybe something like Yahoo Finance or any other tools out there will be better suited. This is just for at a glance, quickly looking at like how a company realistically performs in the past few years. All the data isn't the latest. So you can see revenue has been increasing very good with Walt Disney. From a balance sheet perspective, you can see again, very high amount of assets compared to liabilities. And from a cash flow perspective, you can see operating, they're bringing a lot of money in through operations. And of course, cost of financing seems to have gone down. Cost of investing remains high. So next I have 35.1 shares in Vodafone. You can see over the past month, finally, they are up by 4.66%. And of course, there is a lot of news surrounding Vodafone recently. The fact that they're trying to merge with a different company. There are lots of things going on with Vodafone. Of course, Vodafone being one of the telecommunications companies that were really very, very popular in Europe, but since, recently they have gone on a downward decline. You can see that here from the news feed on Trading 212, that Vodafone CEO calls for changes in Europe's 5G policies. You can see stuff like the UK Vodafone and Germany's RWE Inc. Power have a purchase agreement. Things like that can often actually change the share price based on news and investor sentiment. In my portfolio, however, Vodafone is down by a massive 22.72%, so that is a loss of only £7.27 because I don't have a huge holding in them. Dividend yield, surprisingly, they are still at it with a massive dividend yield of 11.15%. Of course, do not invest into a company just because they have a high dividend yield. A high dividend yield can often be what they call a dividend trap, where the company actually entices people with a high dividend and then cuts it off, and then pretty much the stock goes down in value anyway, and it is a trap. So you can see here some financial stuff. In the income statement, you can see net income is actually increased since 2022. Balance sheet perspective, we can see again assets higher than liabilities, although certain companies such as these telecommunication companies can often put goodwill into these assets. You'll have to actually read into the more financials. In the balance sheet, you can probably find out more, but of course, if you really want to find out about companies, I suggest looking at this at first maybe, but then looking more into the updated figures you'll find on something like Yahoo Finance or any other company that I am not affiliated with. Cash flow perspective, you can see operating remains still quite high. However, cost of financing was also quite high. So next you can see I have 0.91 shares in the Vanguard Germany All Cap. You can see over the past month, they have been doing incredibly well, up by 4.88%. And it's something that I didn't technically have my eye on, and I probably, being very interested in ETF and short-term movement, it could have been something that could have paid off quite a bit. But in either case, they're doing really well, and I think this is the highest I've seen it in a very long while, if not ever. So they are doing really well. Germany's economy, of course, went into recession, technical recession, a while ago, and now, of course, numbers across the world are looking a lot better, including the S&P 500 in America. So in my portfolio, finally, after a while, it is up by 3.34%, and that is a return of 69 pence. Very nice. So next, I have a holding, not so much a holding, but I have the Vanguard FTSE 250. If I go into it, I actually do not have any holdings, but you can see I have 3 pending orders. Essentially, I'm seeing if I could buy this ETF at 29.55, which is unlikely to hit anytime soon, maybe or maybe not, but in any case, I will be waiting. And whilst I'm waiting, I am actually getting a very good price on my cash. So if I go into interest on cash, as you can see, Trading 212 has increased their annual equivalent rate to 5.2%, which I'm incredibly happy about. Currently, I have £25,738.20 in cash, and my daily interest is £3.57. As you can see, if I go into payments, I received yesterday £3.58. And of course, because of compound interest and daily payouts, this number actually increases day on day. You can see from the 19th February, it was £3.28. And then on the 22nd of February, it was £3.30. Of course, I'm trading, making a bit more money, and the pot size increases, and so does the daily interest. So in either case, I have been trading a lot into the FTSE 250. Currently, it is my favorite thing to trade because, of course, look at all this beautiful, beautiful volatility. It seems that whenever it hits the price of nearly £30, it goes back to £29, so on and so forth. I completely do not recommend anyone doing this. The downsides, of course, are the fact that, you could end up getting no return because you're just essentially flatlining your investments. Of course, you could put your money into something like the S&P 500 and that could keep going up or something like that. But I am very happy in trading the FTSE 250, and that is how I've made £500 over the past month. Typically, I do see that I am making around 1% a month doing this. And every year since the last 3 years, I've gotten on average 10%, regardless of where the market is heading. That's the only enticing thing for me, is that you are kind of making money regardless of where the market heads. And for me, I like that prospect. But then again, if I had just put my money into the S&P 500 over those 3 years, I would have essentially gotten the exact same thing with a whole lot less of a risk. So next I have the mighty Tesla, only 0.17 shares in that. You can see over the past month, they actually have been doing quite well, up by 8.2%. You can see here by the news, tech stocks sharply higher late afternoon. And if you really wanted to know why Tesla went up, you can read that on here. Overall in my portfolio, however, they are down surprisingly by 5.24%. Tesla is incredibly volatile, and it's not the kind of volatile style that, I like, because, there's no guarantee that once it goes all the way down that it will ever recover. Whereas betting more on an economy is not guaranteed, but there is a bit more chance, in my opinion anyway, that there will be some rebound. In any case, down by 5.24% in my portfolio, so that's a loss of £1.52. No dividend yield currently, and you can see from the revenue 21 to 23, incredible growth here. Balance sheets, you can see also assets are increasing in line. From a cash flow perspective, you can see operating is decreasing and investing costs are increasing. So next I have 0.12 shares in Starbucks. Over the past month, very flatlined at a positive growth of only 0.14%. You can see everything here on the news if you really want to read on that. The stock for me is down by 2.08%, but because I have a very small holding, that is a loss of only 20 pence. Currently, their dividend yield is 2.45%. And here from the income statement, we can see revenue has been increasing. From a balance sheet perspective, we can see that the total number of liabilities are a lot higher than the assets, or so it seems on paper anyway. And from a cash flow perspective, we can see that it is kind of all over the place, with operating increasing from 2022 down from 2021, and the cost of financing seems to have eased there too, which could be good for the company in the long term. So next I have the wonderful Rolls-Royce, 33.5 shares in them. Over the past month, beautiful Rolls-Royce has yielded us 24.44% in the green. You can see here Deutsche Bank boosts Rolls-Royce, keeps the rating of buy. In my portfolio, it is up by a magnificent 129.57%. However, that is only a gain of £70.95 for me because I have a very small holding. They don't currently pay a dividend yield, and you can see here from the financials that their net income has increased quite significantly. So has their revenue. From a balance sheet perspective, you can see things are looking pretty good. And cash flow, you can see operating has increased, which is really good. And the cost of financing has seemed to ease a little bit. So next I have 2.13 shares in PayPal. And over the past month, not doing incredibly well, down by 1.32%. In my portfolio overall, they are down by 2.07%. And that is a loss of £2.16. No current dividend yield, and you can see from their income statement that revenue has increased, so has net income since 2022. Here from the balance sheet, you can see that, total number of assets is higher than their liabilities. And from a cash flow perspective, you can see operating income has decreased. Maybe that's why, the valuation has gone down. So next I have 2.32 shares in Orange. Over the past month, Orange is down by 3.84%. In my portfolio overall, they are down by 5.64%, giving me a loss of £1.26. They do pay a good dividend yield of 6.79%. And you can see from their financials that their net income seems to have improved a little bit, revenue still staying quite high. From a balance sheet perspective, you can see total number of assets does, on paper at least, exceed the amount of liabilities they have. And from a cash flow perspective, you can see that operating has actually gone up and the cost of investing has gone down, cost of financing has increased. So next I have 0.09, a minute amount in NVIDIA. And what can I say about NVIDIA? NVIDIA has had the greatest run in history of NVIDIA anyway, up 33.73% over the past month. I wish, I had my entire life savings in there, but what can we do? You can see that the share price of NVIDIA is closing up on $1,000 very soon. I remember quite recently I made a video saying NVIDIA was a $1 trillion company, but now it is more than $2 trillion worth. Absolutely crazy. You can see that back in 2018, the share price was only $38, which was still quite high back then. And now it's nearly 1,000, absolutely exponential. I don't even know what to say here. In my portfolio, they are up by 177%, up by £37.95. Everyone wishes they had put more into NVIDIA, but realistically, most people weren't willing to make the risk, so it's not that bad. They do pay the smallest ever dividend yield of 0.02%, and the income statement speaks for itself. You can see revenue has exploded. 2024 data is here, but of course that's not finished. You can see revenue has more than doubled, net income has like octupled or whatever you want to call it there. From a balance sheet perspective, we can see total number of assets have again skyrocketed, greatly exceeding the number of liabilities. And from cash flow, you can see operating, they have brought in so much money. They're doing incredibly well. So next I have 0.4 shares in Nike. Over the past month, they are up by only 0.34%, going quite sideways. In my portfolio overall, they are down by 1.24%, so that is a loss of a huge 41 pence. They pay a small dividend yield of 1.42%. I think that must have been recently cut. And you can see since 2021, revenue has increased, balance sheets look good, and from a cash flow perspective, we can see that operating income has slightly increased, but the cost of investing has also increased significantly. So next I have 0.49 shares in National Grid. You can see over the past month, they are down by 1.9%, not too good here. Overall, however, I am up by 3.23%, and that is a gain of 16 pence. They pay a good dividend yield of 5.49%. And you can see from their income statement that their net income has soared. Balance sheet, you can see that liabilities are lower than the total number of assets. And cash flow, you can see that, you know, operating has increased slightly maybe, but the cost of financing has increased quite a lot. So next I have a member of the Magnificent Seven, 0.07 shares in Microsoft. In the last month, of course, they're doing quite well, up by 4.5% overall. In my portfolio overall, up by 6.16%. And that is a gain of £1.40 for me with a small holding. Dividend yield very small at 0.73%. You can see from their income statement that their revenue has increased quite a bit. Net income seems to have dropped a tiny amount. From a balance sheet perspective, I don't know why this axis keeps disappearing. Honestly, I've tried so many times off and on camera. Okay, now it's back. But anyway, we have seen that the total number of assets has exceeded the amount of liabilities. And from a cash flow perspective, we can see that there is a huge amount of operating income that seems to be covering investing and financing. So next I have Mercedes-Benz, 0.38 shares in that. Over the past month, Mercedes-Benz has been doing incredibly well, up by 17.88%. In my portfolio, up by 18.51%. That is a gain of £3.84. You can see they pay a very good dividend yield of 7.15% and no 2023 financials here, unfortunately. Next I have Lloyds Banking Group, 343 shares in that. And it's been a while, but it is now back in the green, up by 11.37%. Very happy to see this. It looks like the fourth quarter reports are out. Profit has seen a rise for Lloyds Banking Group. In my portfolio overall, they are up by 6.73%, and that is a return of £10.27. They pay a very nice dividend yield of 5.93%, and you can see here since 2022 to 2023, the net income has increased. Balance sheets, you can see assets and liabilities are very close together, as with many banks that is the case. And from cash flow, you can see operating income has decreased very significantly, and that could be why the stock price has been seeing a lot of decrease. Next, I have 6.2 shares in practically what is Royal Mail. Over the month, very surprisingly, down by 12.75%. Very steep decline here indeed. In my portfolio overall, however, I am still up by 13.56%. That is a gain of £1.80. You can see that their net income in 2023 dropped quite significantly, so did their revenue. From a balance sheet perspective, things look okay, more assets than liabilities. And cash flow, you can see they're bringing in a lot less through operating. For some reason, the axis keeps disappearing. I'm very sorry about that, but the pink is operating. Next, I have 3.16 shares in H&M. Over the past month, down by 3.9%. In my portfolio overall, they are down by 0.38%. That is a loss of 13 pence. They do pay a nice dividend yield of 4.63%. You can see net income has increased a little bit, so has revenue. Balance sheets, you can see total number of assets higher than liabilities. And from a cash flow perspective, you can see operating income still lower than what it was back in 2021, quite unsurprisingly here. So next I have 0.298 shares in GSK, GlaxoSmithKline. Over the past month, doing pretty good, up by 5.98%. Overall, in my portfolio, up by a nice 25.19%. That is a positive return of £1. They pay a decent dividend yield of 3.48%. And you can see from their income statement that their net income has dropped quite significantly, revenue being a little bit up. From a balance sheet perspective, again, you can see the number of assets is decreasing, but so is their liabilities quite proportionally. And from a cash flow perspective, you can see less operating income. However, cost of financing has gone down a bit. So next I have 23.17 shares in IAG. Over the past month, they went up quite a bit until around the 27th of February. And then of course they've dipped down by 0.8%. 0.88% overall. In my portfolio overall, that is a negative return of 3.22%, down by £1.13. No current dividend yield, and you can see from the income statement that the revenue has increased significantly, so has income. Balance sheet, again, you can see high number of liabilities compared to assets. Of course, British Airways being a company that has to maintain very, very expensive equipment and buy a lot of fuel, their liabilities are going to be quite high. Cash flow, we can see that operating is down and the cost of financing and investing has increased. So next I have 2 shares in Direct Line Insurance. Over the past month, very surprisingly, up by a massive 22.61%. In my portfolio, they are now up by 4.75%. That gives me a positive return of 19 pence. No current dividend yield, but you can see there is also no data for 2023 or 2024. Next, I have 18.1 shares in Deutsche Lufthansa. Over the past month, tumbling down by 7.19%. In my portfolio, that is a loss of 16.52%. That is a loss of £22.09 in real terms. No current dividend yield, and as you can see, no data for 2023 either. On the theme of Deutsche, we have also Deutsche Bank with 1 share in them. Over the past month, up by 4.42%. In my portfolio, I am up by 1.77%. That is a gain of 19 whole pence. You can also see I've got a limit order. I'm just going to cancel that now. The current dividend yield is 3.58%, and again, no recent financials. Next, I have 1.5 shares in Delivery Hero. Over the past month, surprisingly up by 3.69%. Well, 69%. Overall, I am down by 26.12%. That's a loss in real terms of £10.06. No current dividend yield, no recent financials. Next, I have exactly 1 share in Carnival. Over the past month, down by 5.99%. Overall, I am up by a staggering 61.57%. That is a gain of £4.31. And as you can see, revenue has increased significantly into 2023, although net income is either nothing or it is not written here. From a balance sheet perspective, we can see total number of assets and liabilities are decreasing accordingly. And from a cash flow perspective, we can see operating is significantly up. So next I have 21 shares in British Petroleum, and they are up by 1.99% over the past month. And in my portfolio, however, they are down by 10.24%, giving me a loss of £11.33. They currently pay a good dividend yield of 4.84%, and you can see from the income statement that revenue has gone down, however net income has increased. Balance sheets look pretty good to me, quite high on the liabilities however, and from a cash flow perspective we can see that operating has decreased, so has the cost of financing. Next I have 0.37 shares in BMW. Over the past month they are up by a staggering 13.45%. This could be something to do with the fact that they are expanding their EV sales towards India, EV being electric vehicles. Of course, BMW came out in the scene with internal combustion engines, so did Mercedes, and they're not really known for EV vehicles, but however the demand in countries such as China and India has very much soared recently, which is something a lot of people here don't consider, but yes, developing economies such as India and China, you can call them developing, but they're huge. A lot of growth in the future will be going towards them. So in my portfolio overall, they are up by 9.62%. That is a growth of £3.10. They pay a pretty high dividend yield of 7.78%. and no recent financials for them, unfortunately. So next I have 1.37 shares in Aston Martin. You might think I'm quite heavily exposed to automobile companies at this point, but hey ho, past month Aston Martin has gone down by 7.78%. No hope for them in my opinion anymore. Overall, however, I am up by 22.61% in this portfolio anyway, and that is a gain of 45 whole pence. No current dividend yield, and as you can see, revenue has gone up, but net income is still in the negative. Balance sheets, liabilities look quite high. Cash flow, we can see cost of investing very, very high, and operating is still down from 2021. Next, I have 0.02 shares in ASML. Over the past month, up by 12 whole percentage points. In my portfolio overall, they're up by £32.98, giving me a positive return of a whole £4. Dividend yield very, very small at 0.68%. If only they increased it by just 0.01%. Revenue much higher than 2022 in 2023. Balance sheets, you can see lots of assets here. And from a cash flow perspective, we can see that operating income has decreased significantly. However, so has cost of financing anyway. Next, I have another member of the Magnificent 7 and 0.4 shares in Apple here, down by 2.57% over the past month. In my portfolio overall, however, very much steady 0.07% in the red. That's only a 4p loss. Dividend yield, very, very small at 0.53%. And as you can see from the income statement, revenue is incredibly high. Doesn't seem to be increasing year on year, but very big company, so very hard to do that. From a balance sheet perspective, you can see lots of liabilities and assets. But actually, if you go into the assets and liabilities, a lot of it must be in debt. And I think, yeah, they deal a lot in debt. So actually, they're quite fine. Like I said before, you don't just take the graphs at a glance. You really do have to go in to see what these companies are dealing with. And from a cash flow perspective, you can see cost of financing is very high. Cost of operating is also high. So the next is just going to be Magnificent 7 stocks. I have 1.2 shares in Amazon. Over the past month, up by a nice 14.87%. In my portfolio overall, up by 67.99%. £71.06 in the green. No dividend yield, but of course, as you see from the income statement, revenue very, very high, net income increased. Balance sheets, again, almost no point looking at these because they're gonna be good for companies like these. And from a cash flow perspective, you can see the money flowing in from operating is very, very, very high. Next, I have 0.47 shares in Alphabet. For all intents and purposes, this is the parent company of Google. They are down by 2.11%. In my portfolio overall, however, up by 3.79%, gain of £1.87. No dividend yield, however, but we can see from the income statement, revenue has increased very, very nicely. Total number of assets greatly exceeding the number of liabilities. And from a cash flow perspective, you can see operating income has actually gone up. Last but definitely not least, we have AMD with only 0.03 shares in here. And actually all I did was put £2 in here a while ago. And as you can see, over the past month, AMD is up by 20.84%. In my portfolio overall, up by 158%. So that is more than double my initial principal, up by £3.16. No dividend yield, but again, you can see from the financials, the revenue has gone down a bit, but it is still very, very high. Balance sheets, you can see assets completely dominate the number of liabilities. Cash flow, we can see operating is down. However, cost of financing is also down. So next I want to show you my trading 212 ISA, and again, some of the strategies that I've personally been using, but 100% do not recommend to any mere mortal. So here you can see my balance, my portfolio balance anyway, is £0. But however, you can see here that my account value is £22,870 with a 100% ISA utilization. So all the money you saw in my trading 212 invest account, what I'll do is I will transfer £20,000 in cash into my trading 212 ISA, and of course fill up my ISA as soon as possible. Any of the excess that does stay, I will trade that. So basically in my ISA, I've kind of been doing the same thing. Never learned my lesson, but yes, I've been trading quite a bit into the FTSE 250. If you look at my history, my total realized profit and loss is £2,172, dividend £609. But however, in an ISA, it's very easy to see your profit, because if you max out £20,000, you can just see whatever you have on top of that is actually your profit. So my profit throughout the past financial year has been £2,870. That's around a 10% gain, which I'm very happy about. However, of course, if I put it all into the S&P 500, I'll be looking at something closer to 23. So like I said, there definitely is a lot of drawbacks in doing this, and I wouldn't recommend it. But in either case, you can see just buying and selling the S&P 500 is what I'm doing. Currently, I have a limit order at £29.40, which probably won't hit, but I am quite dynamic in that I do change depending on the market conditions. I could be just fooling myself, but you know, if it hits this price, I'm gonna actually execute at that price, hopefully. That being said, there's a bit more confidence in me doing this because I am currently receiving 5.2%. But of course, why do I want 5.2% when the stock market has over the past year been giving more like 10 to 30%? I don't know, but it is my choice at this present time. So make sure to check out some of my other videos, and I will see you in the next video.